What's going on, guys? Another quick video tonight, and this time it's about Silicon Valley Bank, which is in the midst of, it seems, something of a bank run. Silicon Valley Bank is one of tech's biggest lenders, and people are getting nervous about what this might say about the state of banking more broadly. So what I want to do today is give a sense of what's going on, whether it's something that we should be actually worried about, to what extent it's connected to the collapse of Silvergate Bank, which happened earlier in the week, and basically what happens next. So where this started to really take notice for people, or where people really started to notice this, was when it wasn't just that Silicon Valley Bank's stock was going down. It started crashing earlier in the day. But when all of a sudden it seemed like the entire world of venture capitalists and startups who make up a big core of Silicon Valley Bank's deposits started chattering about getting their money out of Silicon Valley Bank. Kate Clark from The Information is just one of the reporters who was tweeting about this earlier in the day. And the question is, why is Silicon Valley Bank being impaired right now? And for that, I think a really great analysis comes from Jamie Quint. And because there's so much chaotic information going on, I wanted to start with what I think is a really strong explainer. And I'm just going to kind of go through it in full. He says, in 2021, SVB saw a mass influx in deposits, which jumped from $61.76 billion at the end of 2019 to $189.2 billion at the end of 2021. As deposits grew, SVB could not grow their loan book fast enough to generate the yield they wanted to see on this capital. As a result, they purchased a large amount, over $80 billion in mortgage-backed securities, with these deposits for their hold-to-maturity portfolio. Hold-to-maturity means that they're not intending to sell them until the end of the bond date. 97% of these were MBS. Of these MBS were 10-plus year duration, with a weighted average yield of 1.56%. The issue here is that as the Fed raised interest rates in 2022 and continued to do so through 2023, the value of SVB's, wow, that was a Freudian slip, of SVB's MBS plummeted. This is because investors can now purchase long-duration risk-free bonds from the Fed at a 2.5x higher yield. This is not a liquidity issue as long as SVB maintains their deposits, since these securities will pay out more than they cost eventually. However, yesterday afternoon, SVB announced that they had sold $21 billion of their available for sale securities at a $1.8 billion loss and were raising another $2.25 billion in equity and debt. This came as a surprise to investors who were under the impression that SVB had enough liquidity to avoid selling their AFS portfolio. And so what's going on here? Basically, as Dylan puts it, he kind of does another trick at this, trying to explain it. These firms, like Silvergate, like Silicon Valley Bank, saw their deposits go way up because of who they happened to serve in that post-COVID era. For Silvergate, it was the crypto industry. For Silicon Valley Bank, it's tech companies, which are obviously also on the far end of the yield curve and the far end of the risk spectrum. But those banking firms put their money not just into treasuries or whatever, because they weren't yielding then, but into other types of assets, many of which had a long duration. And the issue with long duration assets is that there's a mismatch, a potential for a duration mismatch between the assets that the bank has on that side of its balance sheet and the liabilities, which are its deposits. And so if for some reason all of a sudden those deposits come out quickly, there can be a real problem because the banks have to sell those long duration assets before they fully matured, which often means they have to sell them at a loss. And that selling at a loss then further galvanizes more people to want to withdraw. This is what Dylan LeClaire calls a reflexive panic. And that's exactly what we're seeing right now. So the problem with Silvergate in specific is that when all this happened, so, as Jamie put, yesterday we got this information that Silvergate had sold $21 billion at a $1.8 billion loss and were raising more money, which surprised investors. And when investors get surprised, investors get nervous. And then Silvergate had a call today where the CEO told investors to stay calm and not panic. And I just had to share this tweet from Buco Capital. Rule number 1 of crisis comms: don't tell people to stay calm. Rule number 2 of crisis comms: don't tell people to panic. Don't tell people not to panic, excuse me. And I thought this was perfect, but if you happen to be in the crypto space, which presumably if you're watching this on my channel, you are, I think Avi Feldman put it in a way that we might understand even better. So he writes, in a call earlier today, CEO Greg Becker told clients that the bank had ample liquidity to support its clients, with one exception. If everybody is telling each other that SVB is in trouble, that will be a challenge. In other words, he says, don't say we're in trouble, because then we'll be in trouble. And he said, we'll buy all your FTT at $22 energy, which of course is a reference to Carolyn Ellison's now infamous tweet after CZ said that they would be liquidating their stake in FTT. That was the Sunday before the collapse of FTX, which was completed by next Friday when they declared bankrupt. Okay, so this conference call happens, and all of a sudden there's all this reporting, like we saw right at the beginning of this video, that founders need to get their money out of Silicon Valley Bank. You see it with investors like this. Okay, I'm hearing from dozens of founders about what to do at SVB. It's an all-out bank run. And then you have Bloomberg reporting that Peter Thiel's fund and other venture funds with some really big names, USV, who we mentioned right at the top of the show, is a big name. Coatue Management, Founder Collective, these are big names in the venture capital world. They were advising their companies to get out. And this is exactly what the CEO of Silicon Valley Bank didn't want. He didn't want a bank run to become self-fulfilling prophecy. But the problem, one, is exactly that joke that was being made in a tweet before, that it's sort of the number one thing that makes it a self-fulfilling prophecy is saying you're not in trouble, and saying don't panic, and saying don't worry, everything's fine. But then also the VC and tech world is extremely densely connected. Messages and information and narratives fly through there faster than just about any other professional channel on the planet. And so, of course, this was going to light up the entire VC and tech world. And some meaningful portion of the people in there said, get your money out. Don't risk it. Now, there has been some amount of counter reaction. Mark Suster has said that he thinks that more in the VC community need to speak out. They need to try to calm the panic. They need to believe the CEO. And he got a lot of positive response to this. He talked about why they're potentially in a better position to stabilize than some people are giving credit from. He's saying that basically we need to not indulge in this classic run on the bank type of scenario. He says that people are making jokes about it, but it's not a joke. So there's a lot of counter reaction now, even just a few hours later. And I think that that's good. I think that he's probably right that this is not a thing that you want to see. But I guess the question then, obviously bringing it back to sort of the part of the world where I spend most of my time, is whether people are going to start to connect this to crypto. And then on the other hand, whether there actually are larger bank implications. Well, of course, it didn't take long for people to do exactly that and to start connecting it to crypto. This is Brian Sullivan, the host of an extremely esteemed CNBC show or whatever, saying crypto collapse morphing into something potentially worse, which obviously is not the case. There is a commonality. I don't want to diminish the fact that Silicon Valley Bank and Silvergate share the fact that they had a strong concentration of a customer base in a very risky sector. Obviously, crypto is even farther out than tech is, and Silicon Valley Bank has less of its total deposits tied up in tech than Silvergate, which was really, really predominantly crypto. But there's a commonality here, right? These are banks that serviced the industries that have been hit hardest by higher interest rates, who have had challenges, and who are therefore more impaired relative to other industries that other banks might service. That doesn't mean, however, that it's a crypto collapse morphing into something potentially worse. That is a classic correlation causation error. Dan McArdle from Messari put it this way in his quintessential and often funny form. He says, so regulators force banks to hold tons of treasuries. Banks load up during zero interest rate period. Fed prints $5 trillion. Oh my God, inflation. Jerome hikes at the fastest pace ever. Bonds crash. Banks realize massive losses if depositors demand withdrawals, and then everyone blames Bitcoin and crypto. Lol. Obviously, this is somewhat of an oversimplification, but I think it's kind of, in essence, what's going on. Now, the flip side, it is true that there's a potential that this actually helps people contextualize the failure of Silvergate in a slightly different way. Maya Zahavi, who is consistently a contrarian and very smart thinker, says SVB's bank run might be the best thing to happen to U.S. crypto in a long time. And she says, when asked by Dan McArdle, who we just heard from, why, that it's because it proves that Silvergate wasn't a crypto-specific issue as much as something surrounding this zero interest rate world that's now breaking because of the larger changes in the macro environment. And so the question then becomes, I think, are we seeing other banks being impaired? Is this broader than just Silvergate? And certainly from a stock market perspective, it was an unbelievably bad day for banks. SVB is right up there at the top with a 46% dip, but we have PacWest Bancorp at 19.73% down, First Republic at 15.4%, Western Alliance at 11.6%, and then big companies like Charles Schwab down 8.85%, and so on and so forth. It was a really, really bad day for the banking sector as a whole. It's clear that there is fear that this is broader than just these banks that serviced these far out industries. And then there are out there folks who are pointing out that it's not just these banks that are connected to these super risky industries that have real challenges in their balance sheets. This is a chart that is flying around right now that shows unrealized gains or losses on investment securities and shows that there was a flip around the beginning of 2022 as interest rates started to crescendo. That shows that banks are really holding a lot of potential losses on their balance sheets that just they haven't been called yet, right? They haven't had a bank run that forced them to deal with the fact that there's, $700 billion or whatever it is of unrealized losses that are just chilling on their balance sheets. Lynn Alden tried to put some numbers around it, which I will say are less than comforting, which I think was her point. She says, to quantify it, U.S. banks have $17.6 trillion in deposits, of which $3.1 trillion is backed up by cash, of which less than $100 billion is backed up by physical cash. Anyway, good evening. Dylan shares his GIF. You think that's your money in your account? So the question then, of course, once we get into all of this, or trying to bring it back rather to Silvergate, is what happens next for them? Is there a white knight? Is there someone who comes in? And I think that this is sort of the opinion that I'm seeing folks coalesce around. So Bill Clerico, who's a VC, says, zero inside knowledge, but JP Morgan has always coveted Silicon Valley Bank's business. I'd bet on something happening there. Fed won't let SVB lose customer deposits. So basically the argument here is that the types of customers that Silicon Valley Bank has look very different to outside acquirers or other larger banks than, for example, Silvergate's did. In the crypto space, we're in the middle of a concerted effort from many regulators to force us out of the banking sector entirely, whereas obviously generalized tech startups, that's not the case. They're very valuable clients. And so, to the extent that Silvergate is truly impaired, it's highly likely that there is someone to come in and quote-unquote rescue them, in the process scooping up all those clients. Naval agrees with this. He says, yes, that's my guess. Wake up Monday morning to find out you're banking with JP Morgan. But for now, it remains unclear. There's a lot of nervousness, and really we're just living for the memes. So I think to sum up, there is something serious going on at Silicon Valley Bank. It does have hallmarks, or at least connections, to what happened at Silvergate, not because Silvergate caused it, but because they had a similar set of underlying conditions, both in terms of their relative exposure to risky industries, but also in terms of the larger circumstance that all banks find themselves in now, which is the fastest tightening period and the fastest rate hikes in 40 years. What that does to a bank's balance sheet is something that we are just having to deal with now, and it is unlikely that this is the last shoe to drop in that. I am obviously rooting not for Silicon Valley Bank to fail. I've used them before at previous startups in the same way that Silvergate was an extreme ally to the crypto industry. SVB has consistently been a bank that's tried to do right by startups. So I hope that they survive this. I would urge caution on any of the sort of more panicked feelings on this, but ultimately people are going to do what's best. And once a bank loses confidence, it's very hard to keep deposits there. Anyways, guys, this is spilled over from sort of traditional finance and tech sufficiently to the crypto space that I thought it was important to talk about. And I thought it was important to do so in the midst of all of it right now as people are kind of searching for any relevant information. I'll probably be back with another video shortly on Ethereum being declared a security. I guess here's where that is, or wherever I'm pointing somewhere, I'm going to put in a link to it. But anyways, guys, thanks for listening. I'll chat to you soon. Bye.